All right, let's try to wrap our heads around a real puzzle that's happening right now. On one side, you have a world that feels pretty chaotic, right? Full of geopolitical tension and conflict. But on the other side, financial markets are, well, they're surprisingly chill, hitting highs, acting like nothing's wrong. So, what is going on here? Let's get into this disconnect. This is really the core question, isn't it? How can these two completely different realities exist at the very same time? You have to wonder, is the market seeing something we're not? Or is it just ignoring some really, really loud warning bells? And if you want to see just how calm things are, you gotta look at the VIX. People call it Wall Street's fear gauge. Think of it as the market's anxiety level. Just back in April, it spiked all the way up to 50. But today, it's plummeted to a yearly low of around 15. That's a huge drop, and it's basically the market saying, hey, we're not too worried, even as the world headlines get crazier. Okay, so let's start by climbing that wall of worry. This is basically the checklist of all the global hotspots and political dramas that the markets seem to be shrugging off. Things that, would normally have investors heading for the hills. First up, the Middle East, where things are, well, they're incredibly complicated. You've got the UN slapping sanctions back on Iran because of its nuclear program, which is a massive point of tension. And then at the exact same time, you've got the US trying to broker a ceasefire in Gaza. So it's this weird mix of pushing for peace on one front while dialing up the pressure on another. And the list just keeps going. Here in the US, there's the looming threat of another government shutdown. Over in Europe, NATO has put out this really stark warning to Russia about its aircraft. And then you have Iran's supreme leader saying the nation needs to get stronger. Seriously, any one of these headlines would typically be enough to send a shiver through the markets. So why the calm? What gives? Well, that brings us to the really powerful counter-narrative, the economy. It seems like for every scary geopolitical headline, there's a surprisingly strong economic number that's telling a completely different story, especially here in the US. And this whole idea has a name, US exceptionalism. The theory is pretty simple. It's the belief that the American economy is just built differently, that it's strong enough and resilient enough to just power through all the global chaos and kind of decouple itself from everyone else's problems. It's a huge bet on America's staying power. This quote from economist Deepak Mehra just nails the mood perfectly. The thinking on Wall Street right now is basically that all those fears from last year about a big recession, about inflation spiraling out of control, they were just, wrong. The reality turned out to be a whole lot better than the forecast. And here's Exhibit A for that argument. The US economy grew at over 3% last quarter. That didn't just meet expectations, it completely smashed them. And it was all driven by the American consumer, who just keeps on spending. This is the bedrock of the market's optimism right now. But, and this is a big but, the picture isn't perfect. For example, if you look at the jobs data, there was a massive downward revision recently. It suggests the labor market was actually quite a bit weaker than we all thought, which is a sign that there might be some cracks forming just below that really shiny surface. And the good economic news isn't just a US story. China came out with a huge surprise. Their industrial profits jumped by a staggering 20%. That's way better than anyone expected, and it's a sign that their government stimulus efforts might actually be working, which gives the whole global market another reason to feel optimistic. Now, if you want to see this tug of war between geopolitics and economics in real time, just look at the commodities market. Oil and gold are telling two completely different stories right now. Oil's caught in the middle. On the one hand, all the tension with Russia is adding what's called a risk premium, which pushes the price up. But on the other hand, you hear whispers that OPEC might decide to pump more oil, which would push the price right back down. It's a total stalemate between fear and supply. Gold, though? Gold is telling a much simpler story. It's hitting record highs, and it's a direct reaction to all that global chaos we talked about. You've got central banks buying it up, you have investors running to it as a safe place to park their money, and then you have a ton of everyday people in Asia buying it. It's the perfect storm for a rally, all fueled by the exact same uncertainty the stock market is ignoring. So we've got all these conflicting signals. We've got fear, we've got optimism. So what's the final verdict from investors? Why is the stock market, of all things, siding so hard with the optimists? Well, this chart gives us a huge clue. The S&P 500 strength is really being driven by a small, powerful group of stocks. A massive chunk of the market, 40%, is made up of tech and AI companies. And for companies like these, things like a government shutdown or a conflict overseas, they just don't impact the bottom line as much. They're kind of insulated from all that noise. At the end of the day, it really all comes down to this one powerful idea, which an analyst put perfectly. The belief holding everything up is that the US economy's core strength was never really gone, and after a year of worrying, that strength is just making itself known again. But all of this leaves us with one final, absolutely crucial question: this disconnect, this split-screen reality. It's happening right now, but can it last? How long can the market's optimism hold up against the constant pressure from a really chaotic and stressed-out world? That's the billion-dollar question that everybody's trying to answer.